Hello and welcome to our market alert video for today, Thursday, April 14th, 2022. First of all, I want to wish everybody a happy Good Friday and happy Easter. Whether you celebrate that or not, I hope you have a great weekend. Let's talk about new information we got, which was expected, and that is that the inflation numbers came in very hot, the highest inflation in 41 years. So you have to go back to 1981 to find inflation in our economy as high as it is today. And so, as we always do, we want to learn from history. Now, history does not predict the future, but as the old expression goes, if you don't learn from history, you are doomed to repeat it. And so let's talk about what happened back then and what possibly could happen now. So when inflation hits, as we saw in 1980-81, the cost of products and services goes way up. So for example, just this morning, I read that heard that Amazon is raising their cost by 5% for people who use their transportation services. So what's going to happen? Those companies are going to raise their cost to their consumer by that same 5%. Why? Because they want to keep their profit margin, the percentage of their profit, the same. So if they want to make a 10% profit, they raise their price to compensate for the higher cost, so they still make that same 10% profit. Now, in dollar terms, that 10% profit is going to be higher, right? Because higher revenue at the top minus higher cost equals a higher number at the bottom. So their profit could go up, but did it really go up? No, because inflation did that. So if you took inflation out, they'd still be at the same place they were before. But with inflation, the nominal dollars, the actual dollars, are higher. Now, the stock market, for the most part, is a reflection of companies' profits. So if companies are seeing their profits rise because inflation is forcing that up in dollar terms, not in real terms, then their stock price should go up as well. And that's exactly what happened back in 42 years ago. In the beginning part of that inflationary cycle, the stock market went up. We saw a rise in the stock market. And so what does that mean? Eventually, the consumer can't afford to buy stuff. If inflation sticks around at these high levels long enough, the consumer will not be able to afford stuff. And if they stop buying and if they stop consuming, they represent 70% of our economy, and we could see profits start to suffer. If profits suffer, what happens to stock prices? As we said, they would most likely go down as well, which is what happened back in the early 80s, where there was a terrible bear market that came from that. So as the inflation heats up, the profits also go up because inflation is essentially inflating profits as well. That should inflate the stock market in return. But eventually what happens is if it continues to be that bad, the consumer shuts down, and then we have a bear market and a recession. So that's potentially what could happen this time. Now, the past doesn't guarantee the future, of course. But if it does, then if you go back and look at the bear market of 1982 and back then, it was severe. And so protecting yourself from that, we think, is important, particularly if you are over 50 and you're retired or retiring soon. So our invest and protect strategy is one that is designed to help us to participate. As long as the market's going up, we want to participate unlimitedly on the upside. But when it goes down and we reach a point where we feel the numbers tell us that the odds are now becoming higher that we have a bear market on its way, then we want to get out and protect ourselves. That's the strategy we've been using since almost 20 years now. And it has served us well, we believe, to help our clients to avoid large losses in the bear markets. So if you don't have that, then I would ask, are you taking too much risk given the outlook? Do you have a diversification plan to mitigate, to not be as high risk as maybe you are? Do you have a strategy to protect your principal so that if we do have a big bad bear market like we did in the early 80s and we could have again here in the near future, then do you have a strategy to protect yourself from that? At the very least, I would recommend that you visit with one of our retirement planners and go through the process with us. And we'll walk you through the entire process of determining how much risk you should take, in our view, determining the portfolio strategy you should have, determining if you when our strategy says to sell, and all of those kind of things. We're going to go over all that with you. No charge or obligation. If you want to work with us, great. And if not, that's fine too. So like I said, we will part friends. But at the very least, avail yourself of that information, because right now I think we are in a very risky period and it could get severe in the future. So thank you for watching this video, and we'll talk soon.